Good Friday morning or afternoon. It is now Friday, June 11th, halfway through the year, pretty much coming up at the end of the second quarter. We are here with Veronica and Alan for our Friday investment talk. Let's give it a go today. We're going to talk about some science, I think, today, a lot of science. First of all, some hydrogen power. Alan, you wanted to bring up some stocks or some
Yeah.
Go ahead.
So yeah, science. So I'm going in uncharted territory, but I find this fascinating because actually I've been looking for this for a while. That alternative energy sources and what's the next solar or TAN, what's the next hydro, what's the next battery manufacturer, and this kind of area. It's renewables. It's a play on renewables. And I actually had a meeting with a guy called Randeep Somel. He's the manager of the MNG Climate Solutions Fund here in the UK. He made a presentation specifically on hydrogen this week. His fund covers quite a lot of different renewable and sustainable energy kind of sources, but we focused entirely on hydrogen for this call, which is one of the reasons I wanted to talk to him. It's really only a UK fund, so it's available for UK pensions and various things. There is a UCITS, but it's not an internationally traded fund, but still, it's only in GBP. But basically, we're going to pick up some of the main stocks that they're in. Really, what I wanted to talk to him about was his insight on specifically hydrogen, which is a niche. It's an area that's really growing. I think it's a very interesting area. But basically, the world has committed to have carbon neutrality, or many countries have committed to have carbon neutrality by 2050. Right now, we're not able to get there under the usual energy sources that we have, even the renewable ones. But actually, hydrogen is an interesting alternative to those. And there's some certain areas which we'll talk about where I think it's very interesting. So basically, if you look at automobiles, they're using lithium-ion batteries, and they're working fine because that's essentially a car, Tesla, Nissan Juke, Ioniq, Kia or Hyundai, I think, Ioniq, they're fine. That's perfect for those kind of batteries. 300 miles or 500 kilometers or whatever it's going to make. That's it. And the battery is big enough that it fits in the car. It doesn't make the car too heavy. It doesn't make it too efficient. But if you try to put that into an Airbus or you try to put that into a truck, then it's just not going to work. So you need to have alternative fuels. Lithium-ion batteries just doesn't work. We can focus on the transportation because that's basically where we see some of the main uses, at least initially, particularly commercial and cargo aircraft and long-haul trucking. Just to make things a little bit more complicated, you have green hydrogen and you have other hydrogen, normally called brown hydrogen or gray hydrogen. And what the difference is, it's very simple. Green hydrogen is hydrogen created from renewable sources. So basically, it's carbon neutral already. Whereas brown hydrogen or gray hydrogen, as they call it in some places, that's basically created from diesel or oil or other sources. Airbus is committed to a hydrogen-powered commercial aircraft by 2035. That's not that far away. There's no way a lithium-ion battery can get a commercial airliner off the ground. It's just not possible. Laws of physics prevent it from happening. But hydrogen is different. It's a much more dense battery. It's not as heavy. There's a lot more power in it. How do you play this? How do you get involved? There's 3 stages to the hydrogen story, we think. One is so upstream, downstream, and midstream. So upstream is basically the initial creation of the hydrogen energy, and that involves an electrolysis system function where you take raw materials and you make the hydrogen, you extract the hydrogen from that. And there's companies making electrolyzers which allow us to do that. We'll come on to them in a second. That's the first part. That's upstream. Midstream is basically transportation of the hydrogen itself, and the downstream is basically taking the hydrogen and turning it back into battery power or turning it into a renewable energy source, which you can use either domestically or in cars, trucks, or in aircraft. The upstream part is interesting. There's a couple of very interesting companies. There's ITM Power, Chris, which you might want to look at. They're a manufacturer of electrolyzers. And that basically attaches to the renewable energy source, and that creates the hydrogen. So they're listed, they're a UK company, and they're an interesting company in that specific sector. And one of the other biggest companies in that sector is actually Siemens. So it's difficult to buy Siemens and play them only as a hydrogen play. Siemens is
it's not a clean play, definitely.
Midstream, that's very simple. That's the transportation of the hydrogen gas from the electrolyzer source, from the power plant, basically where it creates the hydrogen, to the final source. So that can be to the airfield, to hydrogen petrol stations or hydrogen stations. What's interesting is existing industrial gas transportation companies are actually making capacity for large-scale transportation of hydrogen. So they're quite well-known companies around the world. Air Liquide in France, Air Products in the US. Linde is a UK-based company, but it's also listed on a US stock exchange. So it's got quite a lot of market share in the US, and it's quite active there. So these three companies, for example, you'll see these trucks everywhere of transportation. So it's very simple. What I think is the most interesting part is the downstream. That's the fuel cells to basically it takes the hydrogen energy and transfers it into batteries and transfers it into a usable source, if you like, at the end user point. We've got a number of these. Plug Power, Ballard Power, these are two American companies. And there's one which these make the fuel cells. And then there's another company, Johnson Matthey, which I think is a US company, Chris. And one called Pneumacore, which is also a US company. They make PGM filters. So basically it's another component for the actual hydrogen cells. But if we go back to the fuel cells and the battery producers, the company Ceres Power, it's a UK power company. They actually have created batteries and created fuel cells, and then they lease out technology. They get royalties from every battery that's made and every battery that's sold using their technology. So they don't have big factories, and all their income is plowed back into R&D to create more and more efficient hydrogen battery cells or hydrogen energy cells. So we like this. What's very interesting is two things. One, the biggest shareholder in Ceres is Linde. So there's a bit of a cross sections there where Linde see that they can transport the hydrogen, but they're also taking part in the third stage of that, the downstream stage. And also, I don't know, are you familiar with ARM Holdings, Chris? ARM?
No.
ARM Holdings sold out to SoftBank. They were a British startup a few years ago, and they basically did exactly the same with semiconductors. They never owned factories. They only created.
Oh, then I am familiar with them. Yeah.
They created semiconductors and basically licensed and sold the technology. Right. And one of the founders of ARM, which was then sold to SoftBank a few years ago, was a Japanese venture capital fund or bank. He's actually joined the board of Ceres. So he's using his expertise and his business model to go to Ceres. Of course, all of these technologies are competing with each other, and there's going to be winners and going to be losers. But it is interesting that governments they're not rowing back on hydrogen, because it is quite different it's not a competition necessarily with wind or wave or solar. It's much, because you can have a solar powered airplane or really a truck either. And they're actually coming out with hydrogen strategies, specifically for that hydrogen implementation, hydrogen batteries.
Yeah, I remember ARM. We talked about this. We actually mentioned. I thought this was a Dutch company, but it looks like it's a UK company, and now it was bought out recently even by NVIDIA, and now there's a lot of scrutiny about if it's a national security risk for the UK to have a US company own it. For sure, some of these stocks have come back to places where.
They've all spiked and then come back off.
Yeah, the Ceres is way up. This Ballard Power. Look, I mean, this was at $40-something stock, and now it's at 18. Yeah. Budding technology, risky technology at some state, because hydrogen hasn't been able to get any grip with cars, but like you said, this isn't a car kind of technology. This
It doesn't need to be for cars.
airplanes. Yeah, this is for airplanes and for other technology where batteries don't seem to work. So
we're basically making the case that, you know, if you have a long distance trucker, and obviously Europe, Australia, United States, you know, the size of the battery to power that, it's not a 300-kilometer Tesla and then he stops.
Does Cathie Wood and ARC Innovation have those companies in her portfolio?
I would imagine so. It's a good question, Veronica. I didn't look.
I don't. Well, this is top 10, but they actually have a disclosure of every fund, everything they own.
I mean, the companies are, so there's much more companies at the downstream side in the fuel cells and things. There was actually one company I couldn't find, Numacore, because I'm not sure the spelling, and I don't know the ticker because of that. But there's much more companies on the downstream side, but they're small, and so I wouldn't expect Cathie Wood to have a 5% position in that. So I mean, that's the risk. These are small companies that should grow, but equally might not grow, might die, and that's the risk right now. That's why you would probably buy a fund or an ETF rather than individual stocks, unless you were, you could spread 3 or 4 bets around and sit.
Yeah, and she doesn't have a specific one on energy, so it's just be part of this innovation one. And innovation one, she's got her Tesla and Teladoc and Roku, Zoom, Square, Shopify, Spotify, Coinbase, stuff like that in there. So, Ron, did you want to talk about some more science?
Yeah,
I think so. Yeah,
more science. More exciting news about what happened this week. On June 7th, America's Food and Drug Administration approved the first new drug to treat Alzheimer's disease, and that was the first new drug for Alzheimer's since 2003. So, of course, we see the euphoric reaction on the market. The Biogen, the producer of this drug, went up 60% at one point. But overall, like, it's 46% since the beginning of this week. And a little bit of the history and some facts. Alzheimer is affecting about 50 million people worldwide. And of course, it's becoming even more common as the world ages, and it expected by 2050, there will be 150 million people affected by Alzheimer worldwide. And it went like a century of research has produced no effective treatment for Alzheimer's. So this is huge news for science community and of course for the market and those companies. And companies like even Eli Lilly, they also went up big this week. The name of the drug is Aduhelm, or I don't even know how how to pronounce it. And it cost $56,000 a year. That's actually the treatment per year. And this amount of money will create huge problems for health insurance in the United States and providers. And of course, because of the price, stock market already rewarded the Biogen's shares. But Biogen has said that it expects about 80% of Alzheimer patients, and there are 6 million patients in the United States, to be covered by Medicare. And Medicare is basically the federal health insurance program for the elderly. So everyone 65 years up will be covered, 80% of patients. And that's, of course, great news for Biogen. But Biogen has faced some criticism from Wall Street and other groups who actually question how the company could justify this price, especially that the medical experts continue to debate whether there is enough evidence and that the drug actually works. And the industry in generally faces criticism over drug prices. And that's why we kind of really cautious about putting more money and warning investors like this is that the drug can be even withdrawn from the market. So be aware.
Right.
This is, yeah.
If you look at
From
a
that
long-term chart on Biogen, you can see where the base is here, hits it here, 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 and here. And then the top, you're right at the all-time highs right now. It actually broke through and then came back and pulled below that. But so this, quite a range, if you look at in the last 6-7 years here trading, that it stays right in this range. Yeah, if this gets, I don't know if you've seen the latest news, Ron, but this Barron's was out today with this article that there was one yesterday, and then I guess another two overnight have FDA experts have quit panel. One was from Harvard, actually.
a lot of criticism.
Huge criticism, even from the panel of on the FDA. Said probably the worst drug approval decision made in recent history. So if this thing gets pulled, or there's like questions over how this drug was approved, this stock can fall hard. So it was a good play. We didn't mention it because it was highly speculative. We did talk about, have talked about things in the past like IBB, the biotech shares that went up recently really nicely following this announcement. But there's a lot of speculation in this. And,
yeah, we also mentioned LLY, Lilly, which is also went up.
Yeah, Lilly went up good. We had always been talking about Bristol Myers Squibb. So a lot of these stocks kind of went up in tangent with what happened with Biogen. Biogen was a huge play, obviously. I'm going to go back to the markets, ditch the science for now, and go back to the markets and just talk about what happened this week a little bit. So I want to talk a little bit about the inflation number that came out yesterday. CPI, huge impact, 5% annually, so bit higher than expected. But I think the whole message was the market tried to break out on that news into new highs. It did barely break out and then got beat back down. There's this feeling that no matter what happens in the market, everything's going to be okay because this inflation is transitory. We've talked so many times about how everybody feels like, you get this little tiny breakout and everybody feels like, oh, the market here is just pricing in the fact that there's no further inflation out this year. And I found this great chart from Nordea. They came out with their ideas about this, and you had Q1 and everybody was saying commodity and food prices are rising, we better increase inflation expectations. We talked about that, and that right now we're in this the latter half of it's just temporary factors such as oil and used cars that are affecting CPI. We don't care about even huge upside surprises. The Fed's saying everything's transitory, it doesn't really matter. They expect that in July and August you'll hear more of this. Continuing year-to-year effects are fading in oil, food, and car prices. So see, it was all just temporary. So you'll see some factors, the CPI actually falling back. But then in September and October, they're predicting that there'll be an overshoot here of optimism when people look at how much people are paying for rent and for housing. And basically what they call core inflation remains sticky at above 3%. And the Fed starts talking more about tapering. There was another article out by Morgan Stanley. Love their research. They said that April 2022 is going to be the maximum run for this bullish period, which is about a 40-month. They expect 40-month market move, which is actually one of the shorter periods of a bullish period for the market. So usually they're around 120 days. A 40-day period would be kind of short, and that is because actually inflation have to be taken care of in the next year. If the market starts seeing that, we could expect some turbulence, kind of some fears of that as soon as September, October. So that's kind of an interesting idea. I just wanted to point out that the market did break out. And McMillan had some good words about this. He says stocks are trying to break out to the upside, but there's not been a very convincing attempt yet. The S&P is probing its all-time highs at 4238. It's just been able to break through. Yesterday, on June 10th, the index sliced through that in strong fashion, but it was immediately met with selling around 4250, and it pulled back to below 42.38 and closed just above it, 42.39. It's hardly convincing upside breakout. But all the internal areas of strength, which had been strong, breadth and pull call ratios in particular, were rather anemic on that breakout attempt. So today is a new day. We see the stock market, I think, pulling back a little bit today, and we are looking for upside breakout to be confirmed. At that time, it looks interesting for long positions. However, if it's not confirmed, the market will likely retreat to 40.60. 40.60 is a good, 8% from where we are today. So 40.60 would be somewhere back down here. So the market, it's kind of at this really critical level of, are we going to get a good breakout? Is it going to be strong? It's going to be supported by internals. The internals are showing that it should be a good breakout. It should be strong, but the market seems unable to do that. And that's because the period of the year, the summer months, it's hard for sustained good moves in the market. So if we do get a breakout, it might just be a little bit of a continuation of this, slow moving grind higher. Doesn't mean we're at risk really of a pullback yet, but definitely nothing to be ecstatic about, and it might be prudent not to waste your time getting yourself involved in that. IWM really has been strong, whereas the S&P hasn't, and that the IWM in the last month has been up. The last 4 weeks has been up 9% versus the S&P trading this 1.6% range here. Mm-hmm. So this has been a big move that usually leads the market higher. It's one of the internal indicators that show this should break out, but it again can't seem to break out above its all-time high. So we're kind of stuck until something gives. You have this choppiness, and we just had a really good last 4 weeks for the Russell, but you just don't know if it's going to be able to move higher. There's a good move in the Qs here, but again, topping out here, it looks like we're coming up to resistance where this was at an all-time high back in mid-April, and are you going to be able to bust through this? We need to see real optimism to say, okay, the Qs are worth this. I do think things like Amazon and Adobe, we just saw breaking out, even Apple, these are the big stocks that need to lead. Apple could make a good move here. Okay, so thank you very much for joining, guys. Have a good weekend. Take care. Bye-bye.